Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Thursday edition of Trader Talk in today's market. I am your host, Kevin Horner. It is a sunny and crisp morning here in Denver, Colorado. Running solo for you as usual on a Thursday today, but I am pleased to be joined by my friend and fellow coach Brent Moores there in the chat. Of course, Brent, a fantastic coach. He and I host this class together for you all on Wednesdays. Brent will be there to get to comments and questions that I'm unable to get to in the moment, but on a solo day, I do like to bring those comments and questions into the discussion. So please feel free to post there for the duration of our show. Of course, we'll go about 45 minutes in total. If you're not already doing so, follow Brent and me on X, Brent Moores CS, Kevin Horner CS, and make sure you're subscribed to the channel here, everyone, so that you're getting all of our updates and notifications on a day-to-day basis. Remember, you get about 6.5 hours a day of live content here on the channel, and we archive the majority of that. So remember, if you missed anything, go back into the archives and be sure to pick up what you may have missed initially there. All right, so today we've got plenty to get to. We did hear from the FOMC yesterday, albeit a very limited amount of stock movement there on the heels of that announcement, as we got no decision, or rather no changes to policy. So we'll talk a little bit about that. We'll see how rates are developing here today, and we have a bunch of stocks in the news, so we're going to make sure to spend a good portion of our last section of the session here today in looking at charts of individual equities and running through some headlines. So with that, let's get to our disclosures so that we can get into the chart. So first of all, please remember that everything we discuss and cover for you here is considered informational and educational. We do not make recommendations, and we do not endorse any specific approach to trading the market. We will utilize technical analysis, of course, as we look through the various charts of the market here. When we do that, we try to offer up insights that traders who use technical analysis might be considering for their own processes, of course. So with that in mind, just remember that while we're considering and discussing technical analysis, we are not encouraging you to make your decisions solely off what we see in the way of technical analysis, but it is a decision piece, and you can incorporate it into your process, but we do discourage you from making decisions based on any one single decision point. Now, if you're new here, our process has us following kind of a top-down method. What that means is we start broadly. We'll look at the major indices, the S&P 500, Russell 2000, NASDAQ 100, expand to some industry groups, some sectors moving around. We'll definitely today, as requested in the chat, touch a little bit on precious metals, albeit I got to be honest, I don't know how to manage those precious metals looks any better than most of you. The moves have been downright parabolic, but we'll talk about more so than maybe where they're going, more likely how some traders may go about managing their trades a little bit. So hopefully that'll be assisting or helpful for some of you. So with that in mind, let's get down to business. I'm going to bring in the S&P 500. Yesterday had a little bit of a red candle, but we did trade through that $7,000 level. We did not finish above it yesterday. Our close was beneath it, 69.78, but we got through 7,000, and so we're trying to see if we can get that actual 7,000 level on a closing basis. Has not happened for us just yet, but as Brent and I were discussing yesterday, for many traders, monitoring the 50-day moving average there in purple could be the moving average of import here. We've had limited time frame beneath it since April of last year, when we recaptured it here in late April, early May. And so the instances of testing the 50-day have actually been your opportunities to participate in the trend. Now, that doesn't mean that it's going to continue in perpetuity. We know better than that, but it does give traders a way to at least manage risk. So if you believe that the 50-day can continue to offer support, then retreats to the 50 offer us opportunities to add. If we get closes below the 50, it offers traders opportunities to lighten up their positions. Now, The question, of course, inevitably becomes, what is considered a true breakdown? You've heard me say it many times. It's incumbent on us as traders to define that for ourselves. So for some of you, one day, and the evidence is certainly here, right? One day below the 50-day is not a sufficient reason necessarily to be selling. In fact, back here, we had a week and a half or so where we were dabbling beneath things, and it was a little uncomfortable to say the least, but we held and we made moves to new levels. In fact, if we take a look at the level of horizontal support that we held here, we've actually managed to move up. If we just said 7,000, we've actually pushed up another 470 plus points to the 7,000 level from this area of support. So clearly this was an important level. We'll see if the moving average at the 50-day continues to offer trend support in the near run. Many of you, we talked yesterday about the weekly chart. You can consider monitoring the weekly if your time frame is a little longer and you're less likely to pay attention to maybe what's happening on a day-to-day basis. Perhaps it's that weekly view that'll offer you a little bit more comfort. And here, it might be as simple as the 20-week moving average. That's the green line here. So you'll notice the green, we've been above that one since May as well, and have held that pretty cleanly on the rallies. Now, the move we saw yesterday, the day prior, was a breakout of the NASDAQ 100, where we had been talking about the necessity of getting through this important ledge because we had banged our head on it a number of times. Well, we finally got through it there on Tuesday. We made a nice open yesterday on the heels of some favorable earnings, and then now we are in a quick pullback mode. Now, I do mean quick. The question becomes whether we're going to hold the level from which we've busted higher. It's a very speedy move to break up and then come back and test immediately, but we'll see to what extent that matters. This could act as horizontal support near run here, and you could see that we've almost got to the new levels, and basically the high there, 26,182, that's our all-time level. Yesterday's high was 26,165, so we missed it by about a total of 17 points. Not a very big miss in the grand scheme of things there, everybody. We're talking about a 26,000 point level on the index, so to miss it by less than 20 points means we were very much right there. So it shouldn't be a surprise. Remember, we have resistance. What commonly happens at resistance? We move toward it, and then we either breathe or pull back. And the question becomes, are we able to pull back a limited amount and thus push higher from here? So we'll see to what extent we get the bulls to kind of step in here over the coming hours and days, which could be instructive for us. If we get pushed back beneath that 25,800 level, then we might be looking at staying within the broader trend here and maybe a test of the 50-day. But we're not terribly concerned because, you know, we are still very, very close to these all-time highs. And when I say not terribly concerned, it does not mean to suggest that the market is only going to move to the upside. We know we're going to get some back and some fill, and as traders we should always make sure to be maintaining our investments to the amount of money on the table that we have comfort with, and we should evaluate levels underneath us where we would look to move on if things change. The reason that these events that can happen can take us to areas of discomfort. Often it's because we're not thinking that there are opportunities, right? And the trader who sits there with their positions fully invested and believes that the market can only go up, and then you get a couple of days of weakness for one reason or another, the narrative changes, the headlines are risky, market grows uncomfortable. Inevitably, if you're not thinking about the potential for that, boy, does it get very, very rough if you haven't given consideration to the potential for those moves. So we don't have to expect those moves to come, but we should be prepared if they do. That preparation will give you a little bit of an opportunity to act in the moment, hopefully, and do so with your best interest in mind. You'll be able to think about that pretty clearly when the market is not in that mode. If you think about it in advance, you should be able to set some levels that you'll be able to reconcile and deal with if and when we do get those pullbacks in place. That's right. Very important, Kelly. Have that plan in place. Thank you. Now, let's look at our small caps here today. We're getting a little bit of a bounce. We're at 0.4%. But if we were going to look at the small caps, perhaps the distinct scenario playing out right now is that while we have pulled back, look at the levels we've held for the last 3-4 sessions here. We had this low test a couple of times, right? We've been there one day today, two, three in a row, basically holding that ledge at around 26.50. So that helps us out a little bit. Lets us know that maybe the selling has run its course. Now, that does not mean that we have immediately put ourselves right back on trend here, right? If the selling has run its course, well, that's one positive step for the bulls. What is the next positive step that the bulls want to see here? They want to see a hold move, right? We want to get a close in the Russell that takes us above the high in a low day of our pullback. And, these last 3 days could all three be the low of our pullback, but the highest high we've had has basically been right here. And so that means over the course of today, tomorrow, into next week, can we trade through that 2687, 2690 zone, which would give us a clear view that we've got a trade above the high of our low day in this pullback? And if we can close above that level, bulls are going to feel like they've got a greater likelihood of continuing the uptrend than they do of seeing a breakdown. Right now, the stabilization of the selling and albeit very limited selling from 27.35 down to this 26.50 area is very limited in scope. So we're not overthinking this, but that doji that I show on the chart there with my oval gives traders the belief that, well, that means that weakness is coming. And my reminder is maybe that's what we've seen right now, right? 1 day, 2, 3, 4, 5. 5 days in pullback, finding support, holding a level. Let's see if we can move off of it. Okay, taking a look at it quickly here, all those lines I drew in on the daily have now come into my 5-minute bar, and you can see the levels. Boy, does that help you out. If you're a short-term trader, maybe you're watching this on the 5-minute bar or perhaps a 15-minute look here. And if you're doing so, taking a look at the importance of that 2650 level, you can see over the last 2 days, 3 days, we've been there a couple of times and we have moved off of it. This is quite noticeable. So if you're the short-term trader, maybe you're watching the 5 or 15-minute bars and you're looking for an opportunity that takes us either above the white, what I'm going to color now as red for resistance, or below the white, going to be now green for support. Okay, so just a way to give some consideration. And remember, it's always a good idea to alter your time frame a little bit. It can help us understand what's happening in the shorter trend or the longer trend. Maybe give us a better snapshot of the true trend that's maybe driving price. So we've got a pretty clear scenario here as it relates to the Russell. Now, what's interesting to me is that the Russell is at least stopped the selling in here and is digesting bullishly somehow all of these elevated 10-year yield rates, right? Look at this. We moved through. We talked about the importance of 4.2 or 42 on this instrument. This is we're just moving the decimal place one spot. So really, this is a view right now that we're at around 4.26 on the 10-year yield, and we're seeing this yield climb as we get a sell of U.S. Treasuries. So somehow Russell has maintained its elevated levels in the midst of elevated 10-year yield. So we are digesting this a bit bullishly. The question becomes, is this going to change if yields continue to hold between 4.2 and 4.3? How much higher can they go and still allow the Russell to continue its uptrend? That's fair to ask. I don't have an answer for that. I apologize. We're going to simply continue to keep a close eye on it, because at some point it's possible that there will grow discomfort with higher yields associated with those small cap positions with higher debts, right? And if we get to that point, yeah, you're going to see it in the way of price action relative to the Russell. So we have to keep a close eye on it. Potential to exist for us if we make a new high over 4.343 here on the instrument. If we move through that level, it is possible to create a bit of a headwind for us in the small caps. We got to keep an eye on that. Some of you were talking about the elevation in the VIX here. It's popping a little bit. We're seeing the S&P move off of our intraday open. So we're pulling back and we're seeing the VIX elevate and spike a bit here. The question behind that, I'm not entirely certain, to be quite honest, now that we've eliminated the FOMC decision from yesterday from our view of things. This commonly, I believe that we see the VIX elevate and advance of these so-called known events. Well, that's not really the case here now. So the spike here is noticeable, but I'll remind us that we get elevation and spikes in the VIX. It's the movement. Most commonly, the move in the VIX is the revert to the mean. So we'll see. Does this mean that we're getting a bigger spike? Are we going to push higher even still, maybe into the 20 zone? I mean, notice the last time we got into the 20 zone, boy, was that short-lived, right? So we'll see to what extent that impacts the rest of things here. Okay, I wanted to absolutely get to those precious metals for you. So we're going to talk about precious metals now here, everybody. And before I do so, as I'm in the process, I'm going to bring up the big ones. We're going to talk gold, we'll talk silver, we'll also look at copper for you. But in so doing, I do wish to give you all a little bit of a reminder about futures, because we're going to be using future symbols here. So just remember that futures options trading, this involves substantial risk. It's not suitable for all of us as investors or traders. You do need to familiarize yourself with the risk disclosure statement for futures and options. And in order to trade those, we ask you to be prior approved here at Schwab. So you got to go through your requisite steps to make sure you're ready to go. So please make sure you're doing just that. And what we'll note here on gold is that the rally has extended and it looks parabolic. These are jumping straight upward. The last horizontal support we busted, or rather resistance we busted, was around 4,600, and we've added nearly another 1,000 points, or not $1,000 an ounce. That would be 4,600. We're up to 55.38 here. This is crazy, to be quite honest. This is not apt to continue. What I mean is, it's not apt to continue in the speedy ascent that it is. We will get moves. The trend is good. The trend is bullish, is what I should say. However, when we pay attention to this, at some point, yes, it can continue to move like this, but it is also at risk for even a pullback to an area that could be considered supportive. And yet the question is, how does a trader manage this, right? What is it that you as an individual can do to protect your profits? Because the movement along the way is such that the trader may not believe what they are seeing. And you'd be well within your rights to say, I don't understand it. I don't believe it. It continues to move to the upside, but you need to make a decision one way or the other. All right. So whether we're talking gold or silver, okay, we're going to talk about it from a management standpoint here. So I'm going to give you a few concepts. Remember, for many traders who want to sell on weakness, they will do so with the speediest moving average they can that has been proven to provide support. That right now looks like the 20-day, but look at the distance from where we are to the 20-day to be proven time, hey, it's time to sell. Okay, so the question is, if you're willing to sell only on a close under the 20-day, that means you got to give up 15% almost, right? 14.3. All right, that's substantial. That's nearly 800 points. $790 an ounce is what that says from the current price. Just to know that you've broken the trend against the 20-day, okay? That is a lot for most of you. That's a lot to give up, okay? That's way more profit than people would like to give. So what's next? What about a 10-day moving average? 10 days are just shy of 5,000. Now you're giving up only 600 points, right? So maybe the 10-day, okay? Some of you saying, what about the 5-day? That's also a possibility. Let's take a peek. Here's a 5-day. 5-day, okay, now we're giving up only 300 points. Getting closer, right? So here you've got some ideas. Now, one other thought, if it's not the moving average, maybe it's a 1-day, 2-day viewpoint that says on the day we make our high, okay, I'm going to go back to my standard moving averages there for you. You've all heard us discuss the so-called Cahold move, right? The close above the high of the low day after or in the midst of a pullback or drawdown. Here, because we are rallying to the upside, if the trader is looking to try and capitalize at close to the peak as possible, there's two thoughts. One, you can simply sell as we continue to make those highs. Not to say sell everything, right? Some traders will just simply peace out. I'm going to sell 5% up here at this elevated level. If we get back to a new high today, I'll sell another 5%. All right, selling into strength for some traders is the proper way to go about it. And what it enables them to do is stick with some of those remaining shares, right? Because they simply have been unloading at elevated levels. So when the retreat inevitably comes, now it's happening on a lesser sized position and they're giving back fewer dollars of profit. They're more comfortable with that. Again, part of this process is you individually, all of us, learning what is that one thing that's going to give me the greatest comfort. Who are you as the trader? Are you the trader who likes to sell into strength? Are you the trader who likes to sell on weakness? Are you comfortable giving up some of that profit? Okay, we just need to define that for ourselves. So going back to the so-called Cahold, the inversion of that is the Cablode, close below the low of our high day. So if we don't like the 10-day, we don't like the 5-day, we would prefer a trade through the low of our high day instead. Well, then that right now, at least, could be today's intraday low, right? So if the trader was saying, I want to move on only on that first indication of weakness, it might be Friday morning, as an example. I don't know if this is going to play out, but if today was the high candle and tomorrow morning the trade was to open below today's low and continue to fill down, that could be a scenario by which a trader would lighten up as well. And it would give them a bit more comfort. Look at where we are. You know, the low here, 54.40 approximately. That's cutting our distance by about a pretty substantial amount, right? When we're looking at the 20-day, we're giving up $1,000 an ounce. When we're looking at the 10-day, it's more like 600 an ounce. And at the 5-day, it's like 300 an ounce. And here, it's like 150 an ounce. So each step higher, you are protecting portions of your potential profit. The question becomes, how much risk are you willing to take on your profits? Right? Not likely that you're sitting here going, am I going to turn what is a winner into a loser, because you've likely sitting on a fair bit of profit here. Now, John, yeah, this is a great question. Could a trailing stop be applicable? Perhaps. That depends on your instrument, though. Remember, because we're talking, and we're not speaking to trading the futures. I'm simply talking about it from the chart standpoint, okay? And I want you to carry that with you. So, could it be, if you were utilizing an instrument like an individual equity in the space, for example, that you wanted to incorporate a trailing stop? Absolutely. But you also, especially if you've managed to maintain, this position for a while, a trailing stop could make a lot of sense, because the likelihood is that you are staring at enough profit that giving it wiggle room you have comfort for makes a lot of sense. And some of you, John, it might even make sense to do a little bit of profit taking at the elevated level and then follow up with a trailing stop that's even wider than you would initially have thought, because you have taken profits at the elevated level. Okay. And again, I don't know. I don't know when this will happen. I'm confident that eventually we're going to see a pullback in the price of gold. I can say that. Prices don't go up in perpetuity. They don't go down in perpetuity. There are cycles here. We would expect a pullback, whether it's gold or silver, but the point remains the same. We have to be comfortable with whatever it is we're devoting to the trade. Make sure you're looking to take your chances where it makes sense, right? Pull those profits, capitalize, etc. So I hope I've given you all something for consideration in your planning to try and take some profits at some point. There will be a shift. I just can't tell you when because as usual, technical analysis doesn't foresee the future. It just helps us manage our risk along the way. Okay. Now let's look at silver. It's going to be similar. Everything we said about the gold contract can be applied to the silver contract, at least in terms of management. And I think it's imperative that we give consideration to all of this, right? So, same thing. Let's see, the 20-day, way too slow. We're down there at 91 and a half. That is, my goodness, nearly $30 an ounce away, everybody. That is huge. What about the 10-day? Okay, now we're 17 points away. Let's make it a 5-day. There we go. All right, now we're only 8 points away. So once more, what is the prevailing trend you want to monitor? Do you want to use it based on what you're seeing on the daily chart? Maybe you're the trader who says, you know what, I'm going to try and capitalize in the moment, and I'm going to utilize something like that intraday 20 period exponential moving average. As you can see, that's not great because we've been above it and below it, above it and below it every bit of the rally. But it could be said that there's a bit of a pattern development through here with the most recent move, right? Because you had this pennant that broke to the upside. And so, if nothing else, maybe some traders would say, yeah, boy, in this space in here, they might look at the short term lows and say, well, if we made a new short term low on the hourly chart, for example, maybe they'd look to move on. So there's a couple of different thought processes available to us, but as always, it's really a measure of trying to find what is going to give us the best level of comfort here, right? I mean, it's not going to be easy, and I'm sure some of you are experiencing just a little bit of discomfort by virtue of the fact that the run here in both of these positions has been so dramatic. It would be hard to have expected the level of just straight up move that we've seen here, these massive pushes to the upside. So I think that makes a lot of sense. But more than anything, the important aspect here is to be prepared and know where you're going to make some changes. Okay, that's so important. Okay, the other one to quickly hit on here in the future space we wanted to touch on was copper. So quickly we'll look at copper, which as a validation, my goodness, what a pop to the upside here. Validating kind of the view of the economy. Remember, if we're going to utilize and see copper prices rising, it's likely tied to demand for copper, and that is a good signal as it relates to the broader health of the U.S. economy as well as the international. So we'll keep an eye on copper as well with this move. That is significant. You'll notice that if I activate here, take this line and extend it from the last highs, anybody shouldn't be surprised that we started to try and find our trend right in this vicinity with the 20-day moving average, and we basically held it in here. So that's also a notable move there on copper. Okay, now I mentioned off the jump this morning that we have a bunch of stock in the news today. And so I'm going to spend maybe the last 15 here working through a ton of charts of individual stock for you all. So let's get to it. Got a bunch of them. We're going to lead with a little company known as Meta. They had earnings overnight and have reacted relatively favorably, up about 8%, which you can see here. I drew in the height of the range earlier here. So the range was the low down here was maybe 585 up to the peak and near the 200-day 675. So about a 90-point move here, right? A 90-point range, that is. And now that we've broken the 90-point range, some traders will tell you we can make that move up 90 points. Which would be up to about 765 from 675, and that's the level up here. You'll notice that happens to coincide with the prior highs, or pretty darn close to it, right? So that gives you an approximation of a target. We were up a bit higher here today, and we've sold down a little bit, but a nice move in Meta following earnings nonetheless. Barclays raised the target on Meta today to 800 from 770. They maintain an overweight rating on the shares. The firm says that the company is back to business in Q4 2024. But more impressive than Meta's massive spending growth is its accelerating revenue trajectory, which eclipsed 30% in Q1. They're stating that this is kind of blanketing, if you will, any concerns that investors may have had. Additionally, UBS raised the firm target on Meta to 872 from 830. They maintain a buy rating. Wolfe Research raised the target to 850 from 800. They maintain an outperform rating. Roth Capital raised the target to 850 from 800. They maintain a buy rating. JP Morgan raises the target to 825 from 800. They maintain an overweight rating. Wells Fargo up to 849 from 754. They maintain overweight. Piper Sandler 880 from 840. They maintain overweight. And finally, Morgan Stanley raised the target to 825 up from 750. They maintain an overweight rating on the shares. So lots of discussion and lots of positive reaction following the earnings. The most important action, of course, is the price action through the 200-day moving average and perhaps eliminating the range that we have been mired in for the last 3 months here. So back above the 200-day moving average, many traders are going to make note of that. And for some of you, you might be looking at the gap ledge created with today's trade and today's open, and we'll see if the low that we created here in the neighborhood of 715 is held over the coming few days, and that might offer traders who want to add to the position an area under which they would choose to move on. But we'll see how that goes over the coming days. Commonly, we need a few days of digestion to at least establish the new potential floor, and we'll see if today's low gives the traders in Meta that opportunity. All right, next up on the list, I wanted to touch briefly on the conversation around NVIDIA, Amazon, and Microsoft. These are all together in talks to invest up to a composite or aggregate total of $60 billion in OpenAI. So this is kind of a headline that made the way yesterday, or over the last couple of days, I should say. So briefly, let's look at NVIDIA, which has not been trending per se, right? You can see that we've more or less gone sideways. There's been some big moves in here because, you know, from up from 212 down to our 170 approximation here. You know, we're down 20% if we get to the 200-day moving average, 20% from our peak. It just doesn't look like it because NVIDIA has been, you know, just cruising, obviously, and it made a big push from the lows in April on the tariff discussion we had back then. Stock made a massive push, 140% up. So we needed some digestion, obviously. Giving back 20% is not a huge give back here. So eyeballing the price action in NVIDIA, really what we've seen is consolidation here. But the positive is that the spend from these companies toward AI gives us the reminder that perhaps the AI trade is not dead, but rather been breathing here as we've been digesting, big moves to the upside. We've seen this play out in the other areas of the market. The other two companies we wanted to look at here, like I said, in addition to NVIDIA, were Amazon. So Amazon's been through this level. I found this chart to be a little bit of a challenge because the action has been difficult to define. We did get beaten back from this 247 level here over the last couple of days, but they are also part of this ad to invest in additionally in OpenAI. By the way, the numbers from that, I said 60 billion in total in aggregate amongst the three big boys there, NVIDIA, Amazon, Microsoft. It sounds like the leader there, NVIDIA, has already done so. They're in talks to invest up to 30 billion specifically. Microsoft to invest ballpark of 10 billion. Amazon to invest between 10 and 20 billion is what's stated here. So you know, the trend on Amazon is a little less clear, but I think the takeaway when I'm monitoring what's been going on of late, and if I eliminated my drawing lines in here, watch that 200-day. You know, the blue 200-day seems to be the most consistently tested zone for support. Doesn't mean you're going to have to see it in the near run, but if you did, it might be an area where bullish traders would be comfortable exposing some funds, given what we've seen from the trend of late. You've basically been above the 200-day since May, and you've been holding it every step. And every time we've come, relatively close, you've been able to buy it up. We'll see how long that continues. The other one, of course, Microsoft. Let's hit that real quickly for you. So Microsoft has broken down here. This is heads up. That's a pretty significant move. Should not be surprised, at least by, my goodness, 11% here following that report. I say shouldn't be surprised. If we were looking at it from a technical standpoint, probably shouldn't be surprised, right? The moving averages are all downward sloping, save the 200-day. But most recently, the big action was this move lower. If I was to, let's see here. Well, let's go with just the 200-day. Okay, so we can clearly see you had this bit of a downtrend right here, right? And when the level here got broken, we made the lower low in the short run. We rallied back into the 200-day right in advance of the announcement, and then earnings come through late yesterday, obviously, after the market, and the market is not pleased with the detail there. And I was looking for something maybe a little more specific on Microsoft here for you all. All right, Microsoft did make a very interesting comment that I wanted to highlight here because this stood out to me. Microsoft is expecting its annual water consumption to reach 28 billion liters by the year 2030, which would be up from just shy of 8 liters in 28 billion liters, in 2020, and 10.4 liters in 2024, 10.4 billion liters in 2024. So clearly, the need for water is substantial as it relates to cooling, and that stands out a big amount for me. Microsoft relative to Morgan Stanley analysts, Morgan Stanley contending that Microsoft reported another, quote, remarkably strong fiscal Q2 with 240 billion in revenue base, growing at a clip of 17% year over year, which is certainly going to stand out. The analyst did remove Microsoft as his top pick, but maintains an overweight rating and a $650 price target. That again is at Morgan Stanley. Baird analyst did lower the target on Microsoft to 540 from 600. They maintain outperform. Goldman Sachs lowered the target to 600 from 655. They maintain a buy rating. Barclays also lowered the target on Microsoft to 600 from 610. They maintain an overweight rating. Lastly, Citi lowered the target to 635 from 660 on Microsoft and maintains a buy rating. And again, I'll remind you all that these price targets are never guaranteed to be achieved, of course. So take them all with a grain of salt. And I just have to remind you whether that's the analyst target or a measured move target we might be considering. All right, what else did I have for you in the way of some headlines? Okay, I got some updates on GE Vernova. They reported earlier in the week. GEV, if I can get my symbol in there accurately, there you go. GEV was upgraded at Goldman Sachs. Price target bumped to 925 from 840. They keep a buy rating. And I say upgraded. They were not upgraded. I apologize. They had a price target increase, not an upgrade. Citi analysts also raised the GE Vernova price target to 779 from 708. And they, of course, maintain a neutral rating there. So that bears a little bit of watching as well. Now, let's see. Looking for a headline there for you all, because what I try to do is bring you headline stocks in the news for a specific reason or another. Somebody asked about Alphabet. I can put Alphabet in here. I did have just a slight headline, and that's the stock itself has been fine here. You've got a series of higher highs and higher lows, probably a 20-day moving average. There you go. So we're sitting right on the 20-day. Less porous would be the 50-day. It has not really been violated at all since May, so maybe a little more comfortable for the broader trend there is the 50-day. The headline I have on Alphabet is pretty limited in scope, but it states that Alphabet, Google sent a cease and desist letter to Cantor Media, halting a UK TV measurement tools that compare YouTube with linear TV and streamers, according to the Financial Times. Those close to the dispute said that Google did not agree that the service was representative of the platform's viewership. The legal request related to how the service breached the terms of service around using its creator content. So apparently a little bit of back and forth relative to YouTube versus a UK version of YouTube. So just a little piece of news there on Alphabet. So we could talk about the chart, but the 50-day seems to be the most important here in the near run, for at least until it's not, right, until we get some action below it. That would be a significant development, because we've been above it now for all of 7-8 months. That does stand out. Okay, I've got some more here in our final few moments. I wanted to get you a couple of upgrade calls. Did have upgrade on Lam Research, Summit Insights, upgrading Lam to buy from hold, stating that the risk reward on the stock remains favorable in spite of recent run up in the stock price over the past 2 quarters, thanks to the company's execution track record and favorable industry setup. So there you are, 100% tied to the semiconductors and what you're getting out of this. Big slingshot move off of the 50-day back here. Stock has added a nice solid 60 plus points just on a year-to-date basis. So a great move there. We'll see if that can continue. But again, an upgrade at Summit. ASML also in the same space here. Got an upgrade today at Barclays. Upgraded to overweight, had previously been equal weight. We had General Motors get an upgrade. So GM, let's put all my moving averages back in there for y'all. There's GM, moved off of that 50-day after a brief respite here, about 4 to 6 weeks of sideways. Let that 50-day catch up. They got upgraded at DZ Bank to buy from hold. New target here at $98. One that I found pretty interesting is Zillow Group. This is obviously tied to the housing side of things. When you take a look at Zillow, the chart is not inspiring, is it? We have maybe found some area of horizontal support down here. We've bumped it and have come off of it a few times, but it's not a great look at the chart. So you might be buying into this one at a time when values are depressed. The comment from Barclays here, upgrading Zillow Group to equal weight from underweight, target push to 72, up from 66, stating that the residential backdrop is stable but not yet inflecting, suggesting that Zillow can post mid-teens revenue growth, faster EBITDA, according to the analyst. The firm believes that a lot of the downside risks are already priced in as it relates to Zillow's recent execution, and the improvement for the stock is tied to the potential improvement tied to risk versus reward. And again, that's just talking about the price level we're at versus where we could possibly be. Yeah, it stands out as possibly favorable, not just for Zillow, but potentially for housing broadly. But the trend hasn't shifted yet. So as always, bit of a grain of salt. And then I think the last one I'll have time for is actually a downgrade call. So hate to leave you on a sour note, but let's pull up First Solar. Looks like First Solar is breaking down from what you might call a bit of a bear flag. Right, we had this kind of action, rallied into the 20-day, couldn't get through it. Now you've broken it to the downside, so that's less than stellar. BMO Capital downgraded First Solar to market perform, had been at outperform, new adjusted target to 263, down from 285. Now this is tied to some comments made by Tesla and Elon Musk specifically. Initially, BMO Capital says that they were dismissing Mr. Musk's comments in this way as kind of aspirational. But last week, Mr. Musk, according to the note here, stated that there was a potential for Tesla building a significantly vertically integrated solar modules that would be manufacturing base for self-generation. Now, that by itself sounded aspirational according to BMO. However, those remarks during the earnings call most recently suggest this is likely to become a bona fide effort, quote and end quote, per BMO. So in the next few quarters, the analyst believes that investors are going to be hearing more about this. BMO believes that Tesla's efforts could overhang First Solar shares for some time and weigh on investor sentiment. So it's like bringing, obviously, a company that maybe hadn't been involved or as involved, and now suddenly they're going to be far more involved in the business that First Solar does. And, Tesla being this 800-pound gorilla and expanding into every other aspect of the market that it could absolutely hinder what you're getting from a company that does exclusively for solar in this case. So keep that in mind. That's the reason for the downgrade, at least today at BMO Capital. I know we covered a whole lot of stuff for you here today, everybody. I hope it was helpful. These solo days, I try to bring you as much content as I can and try to shake it up a little bit for you, since we cover a lot of this stuff on a day-to-day basis, but we don't always get a healthy amount of price target adjustments, upgrades, downgrades, etc. So wanted to make sure we gave you a ton of that today. So as always, thanks for being here. Big thanks to Brent in the chat. Follow us both on X, Brent Moore CS, Kevin Horner CS. Hit that thumbs up for me if you like the discussion today. I always appreciate that. And don't forget, more content from us right here on the channel for the rest of the day. So have a great Thursday, everybody. I look forward to catching up with you again real soon.